Hi, I'm Jenny Brown and a very warm welcome to our weekly Buy-to-Let market update. It's Wednesday, the sun is shining, it's only going to be a good day ahead of us today. I hope you're all keeping really well. Everything's fine here. We've actually got really busy in terms of new applications. I definitely get the sense that the landlords are feeling much more optimistic and motivated to get on and do stuff. I'm sure that's largely attributable to the fact that we're starting to see an end to the whole lockdown situation with the kids going back to school, and obviously the prospect of going ordering a pint in a pub looming round the corner can only help. But I do think there's some genuine interest from landlords in terms of increasing portfolios this year. Now, some would say that's going to be attributable to the stamp duty holiday. I'm not convinced, if I'm honest with you. Of course, there'll be some landlords who are looking to make hay while the sun shines on that front. But actually, the conversations we were having earlier in the year and also at the back end of last year were that some landlords were saying, you know what, at the moment the market's just a little bit too hot for me. I'm going to hold off. Whereas I think now actually people are kind of feeling much more confident in terms of what house prices are going to do, and actually thinking that, you know what, maybe now isn't such a bad time to invest. After all, house prices are holding very firm, and we'll come on to that later. But also rents are going up, so actually things are looking very good for landlords in that regard. So I think some people are actually just saying, you know what, I've sat on this for the best part of 12 months, now's the time to crack on as well. So look, thank you to everyone who are sending inquiries in and giving us business. We do really appreciate it. Now look, in terms of what we're going to be covering this week, we're going to have our lender update. I've got some really good news to share with you there in terms of some repricing that's come out, and then we're going to be really talking about the property market and what people are predicting for the coming 12 months and slightly longer beyond that. I do think it's worth really discussing. I know I kind of joke about it every week in terms of we have to cover off house prices, what's going on, but actually it is really important, because I don't think anyone's going to want to invest where they're expecting property prices to fall off a cliff. So this one is the week we're going to go into this in some real granular detail. Right, so lenders, what's been happening in the last week? So first of all, Paragon have released 4 new products which are under their portfolio range. And by portfolio, what that means is that it's available to those landlords with 4 or more mortgage properties, or people borrowing through limited companies. And they have brought out a 2-year and a 5-year fixed rate for standard properties, and a 2 and a 5-year fixed rate for non-standard properties, so HMOs and multi-units. Now the pricing is, particularly in the limited company space, very good. The rate which particularly caught my eye is a 5-year fixed rate at 3.64. It comes with a 2% arrangement fee. There's an application fee of £299, but a free valuation, and you get £750 cash back. And this is available to 75% loan to value. Now, the reason I particularly like this product is this is available on the HMO and multi-units. And if I told you that Paragon can lend on this particular pricing of blocks of flats of up to 20 units, that really is incredibly keen. Generally speaking, anything over really 8 units tends to traditionally fall into the more commercial end of pricing. So to be able to get a block of up to 20, which covers most of the kinds of inquiries that we're seeing on that kind of pricing, is really an incredibly good deal. Now, we've also seen Landbay launch what they're calling a market-leading 5-year fixed rate, which actually is very good. Now, the key here is it's only available to 50% loan to value. But if you are looking for a 50% loan to value rate, particularly in the limited company space, this deal is very good. It's fixed at 2.99%. Now, this one has a maximum loan size of £1 million, is available, so it has an arrangement fee of 1.5%. But actually, if you have a low loan to value property that you're looking to particularly refinance, this deal is actually, without question, doubt, market leading. Now, Landbay, like Paragon, are very landlord friendly, so no maximum properties in the background. Very happy to accept income from rents, those people who only derive their income from rental profits. They're able to enter older applicants, so all the kind of key things which tend to be stumbling blocks for applicants, particularly professional landlords, these guys can cater for. So great to see some really good pricing be released here. Now, we've also seen Kensington Mortgages make some reductions across their products with rates now starting from 3.29%. They've also got reduced arrangement fees, so some good pricing there from Kensington. Kensington are a lender who they have some really neat pieces of lending policy. So again, no maximum properties in the background, no minimum income requirements. So they're very, very good. We don't tend to do huge amounts of business with them. Why is that? I think because largely there are always other lenders who are slightly cheaper than them. So there's nothing wrong with their proposition by any stretch of the imagination, but it always seems that they're never quite there on pricing, and their criteria is, while very, very solid, there's nothing particularly unique about it which would drive us to them as a particular provider. But it's really great to see that they're revisiting their product range and bringing their pricing down. Now, we've also seen in the last week the Saffron come back to lending in the buy-to-let market. Now, the Saffron are a fairly small institution who are fairly niche. Now, the key thing with the Saffron is that they do not do automated credit scoring. So it's not a computer-based decisioning process when you apply for a mortgage with them. And they're not unique with this by any stretch of the imagination, but it actually is quite a nice thing to have. So for those people who potentially are failing credit scoring with lenders, these types of lenders who do credit checking and full underwriting are a very, very good option. So look, the Saffron, what have they got to say about themselves? Well, first of all, they're looking at rental coverage of 125% of pay rate on 5-year fixed rates. They are saying that actually they're really looking to bespoke solutions for people. So if someone is credit worthy but is struggling, then they're very happy to have a conversation to see if they can cater for their particular needs. Now, Saffron are only looking to lend on standard vanilla properties. The property must be let on an AST, and the income requirement for borrowers is £25,000 per year. Now, if we're looking at limited company lending with the Saffron, they're looking for all shareholders and directors to be named on the application, because these guys will be asked to provide personal guarantees. There's maximum of 4 directors, and they will be credit checking all of these people. But again, like I said, they're not relying on scoring. They're just looking at searching and making a kind of commercial decision based on the overall strength of the application. And their rates are starting from 2.87%, which are very, very good. So great to welcome Saffron back into the market. My experience with Saffron, they're a very good lender. They are fairly niche in terms of their approach. They are looking to try and do the unusual stuff. What is the unusual? I mean, look, it's the stuff that doesn't fall in with the mainstream. So, if you have an application where you're kind of finding that you're struggling to find a home for it, these could be the type of lender who could be a good solution for you. Platform Home Loans have released some 2 and 5 year fixed rate products with flat arrangement fees. They're not bad. The platform Home Loans they're offering is very solid in the vanilla end of the space. They're not looking for landlords with large portfolios, and by large I mean more than 10 properties. They do have minimum income requirements, but look, there are plenty of landlords out there who fit into that criteria, and actually the rates are very good. It's great to see the pricing coming down. And likewise, we've also seen NatWest reduce some of their buy-to-let rates on remortgages and purchase products by up to 13 basis points. Accord Mortgages have brought out some new rates which are lower at 65 and 75% loan to value. They've also put some of their pricing up conversely. So again, they're just kind of, I guess, looking at their portfolio and trying to understand, where their kind of gaps are in terms of the offering that they're providing. They're also now introducing £250 cashback or free remortgage conveyancing work for the remortgage applications, and house purchase products, so anything for a buy-to-let acquisition, now comes with £500 cashback. So lots of jostling in terms of pricing there. And lastly, in the last week, we've seen Vida Home Loans reduce their rates. I'm not going to shout about Vida because, being perfectly honest with you, their service is still not recovered from the initial rush of applications that they saw back in the autumn. They are making inroads to improve things. I know they've been trying very hard to get back on top of things, but at the moment, I'm not comfortable really raving about them, because while they have some unique selling points in terms of their criteria, their service does still leave quite a bit to be desired. So there you go, lots and lots of movement in the lender space, all with rates coming down. Is it a rush to the bottom at the moment? I don't think it is. I think there is a natural point where lenders are going to kind of tap out of rate reductions, but at the moment we're still kind of feeling the effects of where lenders put their pricing up in the autumn and early winter. There's still some way to go before we get back to kind of where things were, so we're moving in the right direction, but I'm not expecting things to kind of end up at rock bottom levels. The market simply isn't demanding that. There's enough business going around. Purchase activity is still holding firm. I don't think we're going to see things getting slashed by crazy amounts by any stretch of the imagination. House prices. So we talked last week that Savills had revised its forecast for house price growth for the coming few years. And in the last week, we've also seen Knight Frank join suit. So what they have done is they have revised their forecast of zero house growth in 2021 up to 5% for the year. Now, what they're saying is that the strength of key market indicators in the first 2 months of the year meant that an upwards revision was always likely, even without the measures announced in the budget. So what they're saying is they're expecting price growth in the UK as a whole to outperform the capital as the impact of the tapered stamp duty, I need more coffee, holiday extension drives demand in lower value markets more consistently through to the end of September. So essentially, because the way the stamp duty holiday is tapered, house purchases will continue to be much more buoyant in the lower end of the market, and it will tail off more quickly in the capital where the house prices are higher, essentially. Now, what they have gone on to say, which I found quite interesting, is the continued uncertainty around relaxation of international travel restrictions meant they have actually revised their 2021 forecast for prime central London down to 2% from 3%. They noted that average prices in prime central London have been flat over the last 6 months as international demand has fallen. By contrast, prices have risen by 1.3% in prime outer London and 4% in greater London. Now, what they go on to suggest is that overseas buyers may factor the upcoming 2% stamp duty surcharge, which is starting next month, into price negotiations, which may lead to a short-term break in activity during a period of price discovery. They also have stated that they believe that demand from international buyers may initially be more skewed towards property with outdoor space than it was before the pandemic, which is obviously very much reflected in, the market as a whole. This could make any recovery in prime central London prices more inconsistent across different property types. So there you go, that's Knight Frank's prediction on house prices this year. So essentially, unless you're in prime central London, you're looking at between 3 and 5% growth. Now, interestingly, RICS have also come out with their latest release on house prices, stating that the recent upward pressure on house prices is showing no signs of easing. And this is according to their latest residential market survey. So the survey's headlines gauge of price growth registered a net balance of plus 52% in February, which is up from plus 49% in January. So at the regional level, respondents across all parts of the UK noted some degree of price growth in latest results, with Wales, the north of England and Northern Ireland all exhibiting particularly strong readings. Now, moreover, whereas survey participants reported a slight pullback in London house prices last month, the latest net balance rose to plus 20% across the capital. Now, alongside this, 12-month price expectations picked up, with the UK-wide net balance climbing to plus 46%, up from plus 30% last month. All UK regions and countries are now expected to see an increase in prices over the coming year, with contributors in Northern Ireland and Wales appearing the most confident that prices will be higher in a year's time. So there you go. Now, the reason that I think it's really important to share this with you is that we've been speaking to, obviously, many landlords over the last 6 months. And many people were saying, that actually I'm not really happy to invest right now. I think the market is very, very busy. I think the prices are very high. I'm just going to sit back and wait and see what happens over the coming months. And look, if you put any stock in this kind of information that's been released by people who are very, very close to the housing market, actually the expectation is that things are going to go up rather than down. So if you are thinking about investing this year, I'm not entirely convinced that sitting on your laurels and waiting for things to kind of fall off a cliff is going to serve you any purpose now. And actually you could find that 6 months' time the house prices are higher than they were now, and actually you would have missed out on, first of all, a lower price, but also potential saving on the stamp duty as well. So if you are thinking about investing this year, maybe the time is to act now rather than putting things on hold. And that's us for this week. Thank you for joining us. I bet you found that helpful. I think really just kind of to summarise what we've seen in the last week, really it is all very, very positive. Landlords are clearly gaining interest. Property prices are holding firm and probably going to go up. Lenders are bringing down prices. So it really does feel like a very, very good time to be either looking to make your next investment or actually consider refinancing as well. If the rates are coming down, down, it can't be a better time to look to do some refinancing and potentially raising capital as well, so you're in position and ready to go with your deposit money if you are looking to invest in the coming months. Now look, as always, there's lots of information on our website, mortgagesforbusiness.co.uk, or do give us a call 0345 345 6788. We absolutely love chatting with our investor clients, looking to see what you guys are up to and how we can possibly help shape a deal for you. So we'd love to hear from you. And until next week, do look after yourselves. Enjoy the nice weather today. Actually, I just looked out the window and it's gone grey now, so forget that. But enjoy your day, and I will catch you next week.